Good afternoon, and welcome to our webinar today, which is Improve Marketing and Increase ROI as a Financial Advocacy Champion. My name is Marilee Orsini, and I have invited a speaker today to be with us. And this is information about me, and why you need this I'm really not certain, except that I am a home care advocate myself. I've certainly been in the industry a long time, and I really enjoy educating the industry when I find areas of interest. And the goal of our webinar today is really to talk about payment options as a differentiator. So those of you who are on this webinar today, I congratulate you because I think you are going to be very, very pleased. I do have us all on mute, which means that we cannot hear any of your background noises or your work noises, but we also can't hear you if you have a question to ask. So if you do, please go to the right-hand portion of your screen to the questions section, and you may ask a question, and we will try to get to those. And if we do not get to your question, then we will contact you personally after the webinar. So today we are going to cover, in the beginning I'm going to do a very short thing about the importance of financial advocacy to marketing, and then our speaker will come and talk about third-party benefits, third-party payers, growing revenue through extending your payment options, and then how to find people who would be looking for those payment options. Let me just briefly mention why financial advocacy is important to marketing. You know, the one complaint that I hear about private pay services is that they cost money, that they're private pay. So if you can eliminate one of those barriers, which would mean assisting in payment, if you can eliminate that barrier to your sales and growth and also understand how to reach those targets, then you will be successful in growing your business. The other thing is helping families understand payment options for their particular situation places you from a marketing standpoint as an advocate, which also through education like we're doing today and like you will be doing if you follow what is being presented today, then it really does show that you go above and beyond to take care of your people, because advocacy is something that people who are searching for home care are looking for. Now, you are in for a treat today. I was just telling Matt before we started this webinar, Matt Capell, who is CEO of FHS SeniorCare Payment Solutions, I was telling him I specifically remember the very first time I heard him talk, and it was in Florida at a conference. And after I heard his presentation, I said, wow, this is information that everyone in this industry really needs to know, and information that would really help our industry. So since then, I have been advocating for Matt Capell and FHS SeniorCare Payment Solutions. So that is why he is here today, and you will see when he presents how much help he will give you, because it's pretty amazing the information that he knows and what his company does. And they've been doing this for 30 years, helping private duty agencies grow businesses and simplify financial operations. So I am going to transfer the presentation over to Matt and let him take it from here. Matt, I believe we are ready for your presentation.
Excellent. Thank you so much, Marilee. We appreciate it, and so glad to be here today. And I think you explained very, very well why a billing company is talking about marketing today. And so we want to try to convince you all to take that awkward conversation about payment options and turn it into a strength of yours, turn it into something that is actually one of your key differentiators. And so we'll tell you a little bit about how to do that today. And first what we want to do is you're probably asking yourself, well, why do I care? How does this impact me? And why should I even pay attention to clients' third-party benefits or payment options at this point? And so we'll walk through a few reasons why that's important. You know, first of all, money matters is really the point of this slide. The private pay is a great component of private duty home care, and many folks tend to gravitate there first. But one thing to keep in mind is that as this senior population grows, as this senior population is entering through all of your doors, keep in mind that the overall level of savings that seniors have is generally insufficient over the long run to pay for the amount of care that they actually need. And so if you see at the bottom left, the average assets of a person who is 65 plus is about $75,000. But their average need for care is $138,000 and could be as high as $250,000 or more over their lifetime from 65 until they pass on. And so private pay, again, is great, but it tends to ignore other segments that could be very important to the clients and very important to you as a business owner. So, for example, benefits like Veterans Administration programs, LTC insurance, Medicaid waiver programs, all those different components are very, very important to understand, and there's many, many more different funding programs and third-party payers that will pay for private duty or non-medical home care. Looking specifically at LTC insurance, there are surprisingly 7.3 million policies outstanding nationwide in the hands of Americans. And this is a neat map here that shows where they are around the country. The takeaway here is that there are lots of policyholders. They're located all throughout the United States. They're located right in your neighborhood. And these are very, very important financial instruments when it comes to paying for care. And so they warrant a lot of attention from all of you in terms of how you gear your business to serve them. And 7.3 million, just to put that into some kind of perspective, that inventory of policies, when compared to the sheer number of non-medical home care recipients today in the industry, is about 4x. So there's 1.7 million clients today receiving care. There are 7.3 million policies outstanding, so that tends to put it in perspective from a number standpoint. When you look on a dollars basis, the entire private duty home care industry itself is about $36 billion per year, and there's $212 billion worth of value tied up in these policies. There's actually quite a bit more than that, but if you assume an average policy utilization of about $30,000 per policy, that gets you to over $200 billion in value. So it's a tremendously important number from a client-based standpoint and from a dollar standpoint. The other thing that's very fascinating about the LTC market in particular is that of that 7.3 million policies that are outstanding, only so many of those policies have been pulled off the shelf of the inventory and actually used. And in fact, last year, only about 3% of those total policies were used or were on claim, as the industry calls it. So about 97% of that policy inventory is still out there ready to be used, and in most cases the folks just aren't ready, aren't of the age or of the condition yet to use those. So last year, for example, that small little sliver, 3%, represented about 280,000 policyholders that were paid $8.65 billion in claims from long-term care insurance companies. So again, to repeat that, 280,000 people generated over $8.6 billion in claims just in a single year. And so you can imagine that as that marches forward and that 3% becomes 5, 10, 15, the amount of dollars that are outstanding. Now, interestingly, when people first pull those policies off the shelf, 52% of the time they're using those policies in a home care setting. In the other cases, they're typically using it for assisted living or in some cases skilled nursing and a variety of other uses of that LTC policy, but over half the time they're using it in your setting. Those folks that have LTC insurance tend to receive more hours, on average 35% more hours of care than those who do not have a policy. 3/4 of the policy inventory have daily benefits that range from $100 to $200 per day. So they can be quite rich benefits, and that, I would say, is also before what are called inflation riders that tend to increase that daily benefit maximum on an annual basis. So again, the average policy utilization is about $30,000 to $42,000 per year for those who have a policy. All right, so that all sounds interesting, but how do you actually use this information, and how does it actually impact you as agency owners? Well, first off, think about the different ways to grow and think about the market that you're sitting in today. The market is increasingly competitive. There are lots of folks out there doing private duty, and there are new independent locations and franchise locations popping up all the time. But in some cases, the product tends to appear similar to the family. And so it is very important that in order to grow, you have to differentiate yourselves. And we believe that using the financial advocacy and using the knowledge of the different payment options out there is really a weapon you can use to help folks not just decide on price, but also look at the different value that they get from your services. So again, the product tends to look the same, hearts, homes, and hands. To the consumer, to all of you, they may look different. To all of you, they have different meaning. You spend some time on the logos, but to the consumer, those logos tend to look similar. And so again, there's got to be a way to differentiate, and we believe this is one way to do it. Importantly, when you think about who pays for care in private duty, if you look at the far left where we have the big pie chart here, and we have the private pay component, most folks tend to think of private duty as private pay. And in fact, about 72% of the industry does receive its revenue first from the family directly. But about 30% receive that revenue coming from third-party payers. And you really have to think about these from a marketing standpoint as different segments of the market. These are different consumer segments because these are different people with different needs and different payment instruments available to them. And so it's important to, as you think of all the different ways to differentiate your business and market your business, also consider that these are different customer segments that warrant different types of messaging for them. So if you consider that all these clients have a variety of funding sources available to pay for care, and many, as we've seen, 28 to 30% actually have third-party payer benefits, we also think there is a great number of what we call hidden long-term care insurance or hidden TPP payers, because those who may appear to be private pay may in fact be funding that care with a different type of policy. So for example, if someone has a John Hancock policy and they're handling their own billing, or their son or daughter is handling the billing, they may appear to the agency as a private pay because they are writing a check or making a payment each week. But in fact, they actually have a policy that they are struggling to manage and in order to pay for the care each week or each month. Also believe that and certainly we at FHS believe the number of clients with TPP funding will increase. That's a function of just there not being enough money among the savings of these seniors in order to pay for care that they need in their older years. And that TPP billing or that third-party payer billing process it's a messy process, and so it warrants some thought, and we'll go through some best practices on how to handle that. At the end of the day, we think that having some flexibility here is going to really allow you to stand out in a competitive market. You want to make it easy to say yes. As Marilee had indicated, you want to get over one of the major challenges or major pushbacks of the sales process, which is payment. And you want to get them over that hurdle, and in order to do so, you really have to step back and assess your financial policies today. In other words, are my financial policies making life even harder for the client or for the family members or the adult children? Are they turning away clients who see perhaps more welcome, open arms from another agency that is more open to accepting different types of third-party payers? And what are you actually doing to help the families and the clients to navigate the funding, find the right matches for them, and help them to open up policies? And making sure that you are not pushing the burden of that third-party billing process onto the family. When you think about how to grow and diversify your payer mix, you want to, again, go back and think about those pie charts and try to appeal to those different segments of the market. What this really could mean for you, and we see many different agencies with many different what we call payer mixes, and so every agency has a different pie chart. And it's remarkable that there are some folks who are 100% private pay, some who are might be 100% Medicaid waiver, and you have everything in between. And oftentimes it's rare for us to see someone who has all the different slices of the pie chart covered. And sometimes that's a conscious decision, but sometimes that is just an oversight or an inability to sort of provide the right kind of marketing messages or the internal capabilities to serve an extra slice in the pie chart. And so consider that when you think about your individual pie chart or your payer mix, consider long-term care insurance. That is the largest third-party payer in this industry. The Veterans Administration, which has multiple different programs. We still find there's a lot of confusion in the industry about these programs, one of which is called Aid and Attendance, also part of the VA Improved Pension Program. Another is called the VA Homemaker Program, which is part of the VA Choice Program. Medicaid waiver, and what's important to note here is that the process flows, the rules, the timetables, and the time required by you and your staff can be very, very different depending on which program you're working with. So we've hopefully proven to you that the third-party payer market is interesting, that long-term care insurance in particular represents a big opportunity. And we can envision how it might be able to help you grow and differentiate your business. So what do we do now? How do we actually make ourselves known to these clients? How do we find them? How do we help them? And what do we actually go and do about it? So first off, make it known. It is often not very obvious when looking at the website of a home care business that they even can support or help or are willing to quote-unquote accept long-term care insurance or other types of third-party payers. So use that to your advantage. Make sure that you do specify. Make sure that you have a spot on your website that might discuss different payment options and flexibility, different types of programs that you work with, and try to attract those folks who are searching for an agency and searching for a provider based on their ability to pay. You want to make sure that you include this information in visit packets. You want to make sure you are letting discharge planners and other referral sources know about the variety of different payment options that you can support. And make sure that you also appeal to the adult children, who, as you know, are not only major decision makers in home care, but they're also the folks that will ultimately, in many cases, have to shoulder the paperwork and shoulder the process of submitting claims on an ongoing basis. And so in many ways, the ability to help out somebody is really helping that adult child who has a busy life of their own to deal with. When you are having the living room visits, when you're having those intake conversations, make sure you're asking the right questions. Don't avoid the payment conversation, and make sure that you are not just asking, are you going to pay with a check or a credit card, but ask if they do have things like long-term care insurance. Ask if they are a veteran. Maybe prompt them as well. Say, do you have a long-term care insurance policy like Genworth or Unum or John Hancock or some of the other major carriers that may trigger a memory? It may trigger just a recollection that, oh yeah, I did see an envelope on mom's dresser from Genworth, and maybe I should look into that and see if that is actually a policy. You should also expect a lot of questions coming back at you. So long-term care insurance clients, for example, have many unique needs, and sometimes they may say, well, geez, I can't remember if I have a policy. They might ask you, they might say, hey, I do have a policy, but what does it cover? Who will track my elimination period? Can you help me with the paperwork? How does all this work? The adult child may say they don't have time to look into it. And then once you have a client with long-term care insurance, sometimes the speed or the slowness with which a carrier pays might impact your cash flows as well. And so you have to remember that you have to make sure you're meeting these needs on the front end. Now let's say you choose to help out, you choose to help this client, help this family with an insurance program. So for example, if you were helping them out with a long-term care insurance policy, before care even starts, you should be verifying benefits. That requires that you actually pick up the phone. You have to go through the policy detail. You have to make sure you understand what it will cover and what it won't. In many, many cases, these policies are confusing to read, and they were written at a time, which could be 10, 20 years ago, literally, where the concept of private duty home care may not yet have existed. and may not have been written explicitly into the policy. And so a lot of times there is an interpretation that goes on between you and the client, and then the policy representatives and the claims representatives on the other side of the phone. And you really have to make sure you're being diligent there and advocating for the client and for your agency to make sure that care will be covered. But it's very, very important to go through this step. Don't skip this step and assume that we'll be paid because you may ultimately, either you or the client may end up with an unreimbursed care event. So when you are, for example, calling out to those carriers to verify benefits, make sure you're asking the right questions and make sure you're asking them in the right way. Make sure you're being very persistent and organized and document everything. We found in our decades of experience that you really have to assume that the person on the other side of the phone may not completely know what they're talking about, even though they do work for the insurance company. You have to assume that information is going to fall between the cracks, that what they told you verbally may not be supported in practice, and so very much you have to document everything, write down who you spoke with, what date and time, exactly what they told you. Oftentimes there will be reference numbers for that actual phone conversation so it can be retrieved from their server later on. And you're going to need all that information to the extent there is some kind of a denial, a short pay, or an appeal required. You're going to need that evidence going forward. So what questions do you ask when you're on the phone with a carrier? Does the policy cover home care? And even drilling down further, at what percentage is it covered? What is the daily policy maximum for home care? Most policies are organized in a way that they have different buckets of what are called benefits. So the home care benefit may be a bundle of things. There might be a home modification benefit, an institutional or facilities-based benefit, and so you really have to dig into the appropriate benefit for this type of setting. Ask about what's called an elimination period, which is a common feature in long-term care insurance policies. An elimination period, think of it as a deductible expressed in days. So there's many times, for example, there might be an elimination period of 30 days. So the care recipient must pay out of pocket for the first 30 days of care, and on day 31 the policy will begin to kick in. But oftentimes those days can be, you think a day is a day, but days can be measured in different ways. They can either be calendar days or service days. So if 30 calendar days expire, that's pretty easy to track. But if it is 30 service days, then only the days on which they've received this private pay care will matter. And by the way, you have to submit evidence of those service days. So the claims process has to start even before the reimbursement process starts. Ask about inflation riders as well. Those can be a great benefit to the family. While their policy may state, for example, a $100 daily maximum, if there's an inflation rider that was also purchased as part of the overall policy, that may entitle them to annual percentage increases in that $100 to offset the impact of inflation. And so you have to understand how that is actually calculated, whether it's a simple interest rate, a simple inflation rate, or a compounded inflation rate, and when during each year that is to take effect. And then look at the other policy requirements for coverage, particularly around ADLs, determining which ADLs will need to be satisfied in order to receive reimbursement, and make sure you understand the carrier's definition of ADLs versus your own definition of the ADLs. So what you're really doing is this whole entire process is becoming, in effect, another service that you are offering. And you'll have to make a decision as to whether or not you do that in-house or you outsource that process, but it really becomes part of your value proposition. And you can now confidently say things to the family or in your marketing materials that you verify and explain the benefits so that you can start care faster without any out-of-pocket expense, and that you're providing peace of mind to the care recipient and the family that claims are submitted on time and with great frequency. And in the event that something does go wrong, if the carrier suddenly starts paying a different amount, a wrong amount, then you have the ability to step in and rectify that situation on behalf of the client. And so at the end of the day, most families do not have those extra hours and days each week to dedicate to this process. It can be confusing. Everybody's busy. They're not trying to think about how to navigate insurance policies day in and day out, and so it can take a while to get up to speed and can be very distracting for either your staff or for the family. In terms of how we can help, just some of the things that we do, we're essentially a partner for this type of process. We think of us as private duty insurance experts on demand. We can handle that benefit verification process up front before care begins. On an ongoing basis, we will file the claims and take the assignment of benefits so that reimbursement, we can track the reimbursement and follow up on any missed payments. And essentially what we're trying to do is remove that burden, that administrative burden that typically involves lots of fax machines and lots of paper. Take that off of the hands of the family, take that off of the hands of your staff, and make sure that you all are able to focus on care delivery rather than paperwork. And so what we try to do is make sure that we're offering a way for you to offload the administrative process, but also to help to differentiate what you're doing. And what we find is typically our customers tend to end up with more clients as a result of this because they are now much more welcoming and much more equipped to take on those different types of insurance programs that before they may have turned away. So to summarize some of our process, from left to right, what we do is first to help unlock those hidden benefits buried in the legal jargon of your policy. We will reach out to the carrier to verify benefits and clarify everything. We'll then prepare a detailed summary so that both you and the agency and the family really understand the important points of that policy as it relates to the specific level of care that they are seeking. We will then, after care begins, prepare and submit claims on a weekly basis. We maintain a database of all the different rules and specifications that each carrier requires, and so we'll make sure that we are submitting in the format that the carriers actually like to receive. And we will follow up and monitor the payments to make sure that those payments are coming in and that the carrier is reimbursing in full for all care received, and really help to provide that support, that financial support and advocacy, sometimes in the background in many cases, so that you're up front and doing your best on the care side. And so with that, we will open it up for Q&A.
Matt, that was absolutely fabulous. Exceeded my expectations as usual. And I see no questions at this moment, so this is your chance. Anyone who has questions of Matt, you've got him live and on the webinar. So if you have any questions about anything he has covered, please submit them now. And I'm going to give you just a minute. Matt, I just am so excited about what your company does, and from how I see that you have helped a lot of agencies in terms of finding other ways to pay for services, as well as some of the other financial services that you all provide. Just got a question. Let's see. I love this. Are you going to have this presentation posted on corecubed? Yes, and I should have said that in the beginning. We do not generally give out our PowerPoint presentations, but we do record them, and this one was recorded, and we will post it as soon as this webinar is over. So you may share it with anyone and give them links. Okay, here's another question, and it just says price. Let's see if there's a follow-up after that. Nope, just a question that says price. I guess he's asking, is there some way to price your services in a generic fashion?
Yeah, sure. I'll sort of comment on that. Generally what we do is we charge on a percentage of billings basis for the ongoing claims submission and follow-up. Typically, some folks have asked us if we could only do and isolate the benefit verification process, which we have done for some people, but usually if it is coupled with the ongoing billing and follow-up, then we waive the cost of that upfront benefit verification, and that really just becomes part of the overall process flow.
We have another question here. Does FHS deal with Medicaid or Medicare?
We deal with Medicaid today, so we handle Medicaid waiver in a number of different states, but we do not today do Medicare.
And now I've got another question from the first person who asked about price to say who pays for it. I'm assuming they mean who pays for your assistance.
Yeah, sure. So we've had folks that do it a lot of different ways. You know, ultimately it is typically baked into the total cost of care that is charged to the consumer. Some folks will view this, some agencies will view it as a cost of their doing business, and therefore they will maintain their pricing at current levels. Some folks will, really price it out to the consumer and pass it on to the consumer by offering it as an additional service, a premium level service or a concierge level service available to the consumer. So we've seen it done both ways.
We have another question here. Is there another workaround to get insurance companies to speak with an agency without accepting assignment?
Yeah, great question, and that can be challenging. You know, typically in our process flow, we will get the client or POA to sign a HIPAA authorization that allows us to speak with the insurance carrier. We'll also get the assignment of benefits. If you don't have both of those documents, then it can be quite challenging sometimes, depending on the insurance carrier and in some cases depending on which representative answers the phone as to what information they will actually give you. And so it can be the case where if you have the HIPAA but not the AOB, you might be able to get some initial policy information, but you may not be able to get specific payment information on if a claim was paid, where it was sent, and in what dollar amount. So we've seen that some people, as a workaround, may sometimes do a three-way call with the client or power of attorney. That can be a little awkward, but essentially what you do in the agency is dial the client and then patch in the insurance carrier. You might have to stay on hold and whatnot, but if you're all on the phone together, that enables the client or POA to provide affirmative permission to the carrier to disclose certain information to you.
And my next question, and this was not a setup, this was a legitimate question, will there be contact info for any future questions? So why don't you scroll down to our contact.
There you go.
There you go. There he is. So anyone who wants to contact FHS has their contact information there. So let me see if we've got any more questions. That was the last question. As I said earlier, if you have additional questions, we would happily answer them offline, and now you have contact information to do that. And we will be posting this recorded session on the corecubed website. So I want to thank all of you who attended and wish you the very best in your private duty growth. And if corecubed can help, we would be glad to, and I'm sure Matt would love to hear from you to have any help that they can provide. So Matt, thank you so much. Wonderful webinar, and I hope that you have a really good rest of your week today. Thank you so much.
Thanks for having me.
Bye.